Good day, everyone. Napoleon. So today we're going to talk about the instrument Deutsche Bank. Some may disagree with my thesis here, but what we're going to do is go over a couple of things. Some people like Steve Eisman, have been very bearish on this instrument, but I wanted to crack open the charts and show you guys something that's been developing here for, I guess, all the way up until 2009, January-ish. So if you're currently invested in Deutsche Bank, or you're thinking of betting against Deutsche Bank, be sure to stick around to the end as we go over this and more. So without further ado, let's dive into the charts here, shall we? Okay, so we're gonna start with the lower time frames and then work our way all the way up to the 3 month. But first, of course, if you're familiar with the channel, the first thing that we do is just verify the descending, ascending, and crucial levels here. We'll do that very briefly. As you can see, the ascending line here back in 2003, January, found a little bit of support on this ascending line, and then of course broke below the ascending line with a very aggressive impulse leg to the downside in October 2008. And of course we found some support down there and came right back up to this line and found beautiful resistance for about 2 years. So hopefully you all can agree and say yes, the ascending line has been placed in a reasonable place. Okay, the descending line here, the green line, is identified by the 3-month candles that was unable to successfully close 2 consecutive purchasing candles to stay above the descending line. You can see that quite clearly here. Only one there, one here, one here. And as of recent here, it looks like ever since October 2016, the price action has successfully made its way above and beyond the descending line of interest, this green line here you see on the screen. And of course, the crucial level of resistance is pretty obvious, the highest level that the price has ever seen approximately on the life of this instrument. Now, what I want to do is go over the bullish case scenarios on this instrument because, again, I'm pretty sure Steve Eisman is still short on this instrument. And if he hasn't learned his lesson as of recently with the Tesla stocks going through the roof, and I'm not sure if he had himself covered on that play, but if not, he's definitely in negative on that position. Let's stay on track here, guys. Basically, what I want to do is point out that let's start at the lower time frames on the daily chart. Please bear in mind that, no pun intended, please bear in mind that the daily, I take it with a grain of salt. I typically do not make my market entry and exit decisions based on the daily at all. I typically take it from a 3 days time frame or higher to make my ultimate decision as to whether I'm going to enter the market or, of course, bet against said instrument in question. Okay, so what I want to do is pull up the moving averages here so you can just kind of take a look for those of you who like the moving averages. Let's see if I can erase the 7-day. Okay. So as you can see, of course, this is the typical setup, the 50, 100, and the 200-day moving averages. And as you can see, from a daily's perspective, I mean, this doesn't mean, it's time for this instrument to go to the moon. However, if you are familiar with the moving averages from a daily's perspective, you'll notice we recently, Deutsche Bank's instrument rather, recently had a golden cross in the moving averages. And of course, that's a very bullish sign here if you ever see something like that on an instrument. But of course, in order to solidify this golden cross, it's in the instrument's best interest to stay above and perhaps even consolidate above the golden line here, which is the 200-day, right? And just kind of do something like that as it consolidates, and of course make the very aggressive move to the upside. So that's what I'm speculating here. It's not all set in stone, but there's a couple of other things I want to pull up as well. Let's take a look at the stochastic RSI here. So yeah, it looks like it's getting down to the lower area. It looks like it just touched the 20 level, and it could potentially even get below this 20 level just to build up some more momentum to potentially move the price in a higher direction. Just the question is now is, will the price retrace from the current levels, which is about $8.52 for those of you listening in, So we'll just have to wait and for the price action to decide whether or not that's the case. Okay, and the RSI looks like it's sitting at about 61. Okay, let's go ahead and move up to the next time frame here, to 3-day. See if we see anything different. Okay. So the stochastic RSI is also in the upper, it's above 80 basically. So I've definitely seen much more bullish case scenarios in terms of the area of the stochastic RSI. So that's not the best area that I'd like for it to be in. But let's see here. Let's pull up the moving averages, see what we got here. Whoops. Volume. Okay. So it looks like the price is currently above the 50 and the 100. And of course, 200 is still just above, currently at about $11.15. So that's probably going to be a challenge from a 3 days perspective, at least, when the price eventually finds some sort of, bottoming consolidation range. And then, of course, push to the upside to find its way up to the $11.15 area. And of course, this could all change depending on how long the price stays within this range. And yeah, we'll just keep an eye on that. And let's see, the RSI is currently at about 63. Now, one thing I wanted to point out with the RSI that's kind of bullish, it's potentially a bullish case scenario. This is what I base my decisions on in terms of whether or not I am interested in entering the whatever instrument it is and to go long in the markets, is I find an area of resistance on the stochastic, not the stochastic, but the RSI. And let me just point out that area for you here to see if you can see that as well. Let's see. I guess let me do more of like a rectangular boxed area. That way you can see it probably a little bit better. Okay. So it's going to be this area right here. For those of you listening in, it's going to be approximately between 48 and up to 53. Okay. And let me just briefly explain why, if it's not obvious enough, right? I mean, it's a pretty clear range where you can see the RSI just kind of found resistance and it breaks down, and it finds resistance and it breaks down. Until the present day, of course, the RSI is currently above this rectangular area here. So, I mean, you can see here, back in, January 2018, you found a small cluster of activity in this area. And then, of course, August 2018 came to the top of that line, found resistance, perfect resistance there. Again, in, let's see, September 2018. And you can see it just kind of, it's been a very difficult area for the RSI to breach above this range, as until, of course, recent day, which it has successfully broken above this range and is currently just kind of, floating just above this range. Now, to me, that is a bullish case that can't be argued, right? As long as the RSI stays above the $53 level in the RSI. So again, this is another reason why I am potentially cautiously entering this instrument with the hopes that the price will increase over time here in the short to midterm. Okay, let's go ahead and move up to another time frame. Let's go on the weekly, and we'll close it out with the monthly and the 3-month. Okay, so taking a look at the weekly here, there's still looks like I just noticed a bullish divergence as well. Let me see if I could point that out. Something like this right there. And if you take a trend line, go down to the RSI, and you'll see that there is a bullish divergence, a confirmed bullish divergence right there. Okay, so yeah, you can see, and this is from a weekly's perspective, and of course, the higher the time frame, the more significant that the actual divergence or pattern breakout rather is of more, significance and important, right? It's kind of redundant, but yeah. So you'll basically see the bullish divergence here, starting from the month of June 2018, and it looks like we had some sort of reaction in terms of turning a curve here in June 2019. So today's January the 24th, 2020, and it's still a developing trend, trying to figure out, whether or not the recent lows here will be solidified And of course, there will be some sort of trend reversal here in the short term. And this is still all speculative until, of course, we get above a few levels that I'll point out here in just a moment. So as you can see, this is still my opinion. Of course, bullish potential from a weekly standpoint. Currently, the RSI is sitting at about 60. And the stochastic RSI, it's still high. And I don't like the fact that the stochastic RSI is high. I'll be honest. It's at about 96 because, you know, when you get above that 80 level, it's definitely time to perhaps, you know, find some sort of breather, and so to speak. Okay. So let's go ahead and go up to the monthly. See what we see. Okay. I think we got the same thing in terms of. Wait, I'm noticing something else. Notice this, guys. Actually, the bullish divergence started way back in December of 2008, January 2009, around that proximate range. There's actually a much larger bullish divergence. Let me just point that out to you guys. If you notice here, right there, okay. Some may say this is a stretch, but I mean, I think it's clear as day that this is in fact a bullish divergence. Now, the important thing that needs to happen is the RSI, and again, my opinion, that needs to happen is the actual RSI needs to break above a certain level in order to say, yes, the trend has been reversed, and now we need to complete this bullish divergence trend reversal and move the price in the opposite direction. And thankfully, the price was in the red today. That way, I have sort of an unbiased opinion on this instrument here. So let's see. So yeah, that's pretty clear on the monthly. The bullish divergence started back in January 2018, and again, we're currently in 2020. So this isn't like something to take, you know, lightly, guys. We've been in a bullish divergence, a potential bullish divergence on the monthly ever since 2008. So that's a 12-year divergence. So with that information, what I would say right off the bat is if this is in fact a bullish divergence and the price will be protecting the recent lows. Let's see, what was the recent lows here? The recent, let's just say the absolute low was $6.61. Yeah, 644 was the absolute lowest point that this instrument has ever seen over the life of this instrument here. So what I would say right off the bat, right? Let's just go down to the RSI really quickly to find some sort of rectangular box of resistance. See if we can identify that. And I would immediately put something up like this, right? Yep, something like that. So as you can see, I mean, there's a cluster of movement, right? As the RSI is just kind of finding its way here, just going to the bottom of this box, going to the top of this box. Hang on, let me just erase that. That looks kind of weird. Okay, whoops. Okay, so notice we've got activity to the top of the box, to the lower end of the box, right? You come right back up to the top. And for those of you listening in, this is going to be the range of about 35 all the way up to 53 on the monthly RSI here. And I mean, it's pretty clear, guys. You got the bottom of the box, go back to the top of the box, right? So this isn't speculative, right? This is pretty clear and cut that there's been a cluster of action near the top and the lower end of this rectangular box here. Now, what I would like to see in order to say that, yes, there's about to be some real fireworks going on in this instrument is, let's see, perhaps a break above this, the top of this box, and to stay above the top of this box. And again, that's at about 53, but I'd like to see it on a higher time frame. Of course, we verified on the lower time frame on the daily that it has successfully broken above. And I think we also verified on the weekly. Let me just pull it up really quickly. I think the weekly is the next. Yep. Sure enough, the weekly has broken above that level. So now that the weekly has broken above the 53 level, that to me, my opinion, is that this thing is about to move. And I guess at the very least, let me just kind of turn that. It will look, oh, whoops. Let's go back. Wow, this was obviously rehearsed. Let's see here. So I would look for something like this on a monthly. Now, if the monthly's RSI is able to successfully get above the 53 level, what that would mean to me is that, let's see, let's put a level. So basically, if you look all the way back, since October 2007, the RSI has not successfully maintained movements on the RSI from a monthly's perspective above the 53 level ever since November 2007. So that's basically how I would look at it. And if I were to see something like this from a monthly standpoint, that to me would mean that we're definitely in a bullish, have a bullish momentum, very aggressive bullish momentum about to happen in the very short to midterm. And we can speculate and say that even perhaps the price would get all the way up to or just below the levels where it was back in this range. I'll throw a vertical line just like that, and I'll do something like that, and then we'll go to the corresponding price, and that would take it at about, ooh, it's pretty high, huh? An unbelievable level of $94.88. Now I know some may say, dude, that's never gonna happen. $94.88 and it's at $8, never gonna happen. Forget about it. And I could totally agree with you if you say something like that, because from the current levels, that's actually going to be a pretty significant move in the price. Let's see here. It's about 1,000% to the upside. Now, I'm not going to say that it's going to get that high, but what I will say is it does have the potential not only to get that high, but it has the potential to actually breach above the highest high, which is at $127. I know I'm going to get comments down in this section calling me crazy. I know I'm going to get that, but this is the way that I understand charts and candlestick patterns, and it is suggesting that if we were to have some sort of consolidative bottoming pattern here in the price, that the price will potentially get to that level. But I guess realistically speaking, if I had to just kind of choose a much more, let's just call it logical area to retrace up to, I'll pull up the 3 month and I'll look at the significant level from a 3 months perspective, right? And I can immediately say that this line right here would be significant right there at $36.22. And if it isn't obvious enough why I point out this level, you'll notice that back in 2001, 2002-ish, we had some support there. We found some really good support from a 3 months perspective from the candles, the bodies of the candles, right? And then notice that after that very, very aggressive move to the downside in 2008, the Great Recession is what they're calling it, found support. And of course, we got a cluster price action here, April 2012. And of course, the official break below and then verify resistance right there. It's pretty clear. I mean, this is a very significant level, right? And hopefully you all would agree and say, okay, it's a pretty good line you got there. It's 36.22 for those of you listening in. So again, if we are in fact in a bullish diverging play here in the markets, and we will potentially see a reversal from the trend that's been down for so long. I mean, if you were shorting this thing, I mean, you've been having a field day. You've probably never lost as long as you shorted the thing after April 2007. You had a field day, right? But I think the tide is probably about to turn. So if you're currently short, I personally would be cautious on any short position that's below 36 and a half, right? If you're short 36 and a half, I would potentially be very cautious about keeping that position open here at the current levels at about $8.56. And this isn't financial advice. This is just my opinion. I'm just a speculator talking on YouTube, right? So basically the price has been going down ever for 4,658 days. So, I mean, if that doesn't spell or smell something needs to be relieved in this price, then I don't know what will, spell some sort of relief in the price. Because this thing has been going down for a long time. If there's any type of interest whatsoever in this instrument, I'd say that the purchasing interest, that is, would happen in the market sometime in the near future. I can't really put a date on it. Let's go back to the monthly here. But what I will say is that, this thing it's boiling to do something, right? Whether that's going to be a reversal to the upside, which I'm speculating it is. It's boiling to do something because it's been diverging. We've already verified that on the monthly. There has been a breach above from a daily perspective, 3 days perspective, and a weekly perspective, and has broken above the 53 level. So to me, I feel as if there should be some sort of price activity, whether that's to the upside or the downside, as long as the current lows are protected, 644. I mean, there's no other way to go other than up, right? If those levels are going to be protected. I'm actually interested in the current levels all the way down to, I think it was $7.88, something like that. So yeah, so about $7.85. I'm definitely cautiously interested in this instrument. So yeah, that's pretty much all I have for this. But I guess let's break it down one more. Let's take it down one more notch. Because I think, let's see, from a monthly standpoint, I pointed out one target, which is 36.22. That's, hey, I'll take that. It's a pretty nice move. That's a couple, yeah, it's like a 3x, 317% to the upside. But the more logical, my opinion, level to get above before we could see any type of price action like that would be the previous resistance level. Support and resistance level. Yes, in this case. So I'm going to say that it's going to be this level right here at approximately $13. So if there's going to be any type of movement in terms of, $90 or $30 or anywhere close, the first level it has to get above and protect and stay above, my opinion, would be the $12 to $13 level. Let's see right there. Yep, about 13 bucks. Okay, so I think we already pulled up the monthly, the 3 month. Is it the monthly? Did we look at the 3 month right here? Any moving averages? Well, no, there's not enough data to support any moving averages. So that's my thesis on this, guys. And look, I mean, there's enough room for the stochastic RSI to move to the upside. It hasn't breached above that 20 level just yet on the stochastic, but there's enough room. So to me, that means there's enough room to go to the upside, right? It's already hit the floor here. Let's see, 3 times, 1, 2, 3. So I mean, it can either just kind of lay on the floor or have some sort of potential to move to the upside. So I'm cautiously, long, entering small long positions on this instrument. And I'm pretty sure I'll get ridiculed down in the comments section. But yeah, you guys go ahead and leave your comments down below if you agree with what I'm saying. If you totally disagree with what I'm saying and think I'm about to get wrecked, leave those comments down as well. I'm always open to constructive criticism as I further my education and understanding in the traditional and alternative market. So it's Napoleon Macro here, guys. I'm going to go ahead and sign off. So till next time, I'll catch up with you guys in another video. Good day.